Hi, this is Chandrashekhar Prabhu once again. We have discussed several times about self-redevelopment and funding for self-redevelopment. We have discussed the RBI circular, we have discussed how financial institutions can bring self-redevelopment, the funding and how this funding can come from various sources. However, there have been several societies which have implemented the self-redevelopment program without the help of any funding from any bank or any NBFC or any financial organization. It would be very surprising to people. It is not that these people are moneyed people. It is not that these people have got access to a lot of money and so they do it without the help of funding from any bank. How can a self-redevelopment project happen and be completed successfully without the help of any financial institution? We are going to discuss that today. Under the self-redevelopment program, we have 5 components which need to be studied. First is the carpet area of what the member of the cooperative society is presently occupying. Second is the extra area which is available to the member free of cost. Third is the capacity of the member to buy certain extra area over and above what is available free to him. So let us understand the schemes which bring in the funding. Whatever any builder would offer to a cooperative housing society in the form of free area, under the self-development, the area given to a member is much higher. For instance, on cooperative housing society on private lands and on government lands, if the builder would offer 20% to 25% extra area, when the cooperative housing society develops it under the self-redevelopment scheme, the area is minimum 40% and in some cases 60, 70, 80%. In places like Dahisar, it may be between 40 and 50. In places like Borivali, it may be between 50 and 55. In places like Andheri, it may be between 55 and 60. In places like Bandra, it may be 70 or 75. In places like Worli or South Mumbai, it could even be more. So the extra area given to these societies depend on the selling price in the market for the sellable area. Let us come to the redevelopment of old and dilapidated cessed buildings. In this case, the clause that 50%, 60% or 70% of the area required to accommodate the existing residents gives you a scope for an FSI of 7, 8, 9, 10 and in some cases even 13 or 14. These permissions have been given, that kind of FSI has been given because of section 33(7), under which the available FSI is 3 or whatever is required to accommodate the existing residents, plus an incentive FSI of 50%, 60% or 70% depending on the size of the flat and the number of buildings involved in the self-redevelopment program. So, under this scheme, there is unlimited FSI which is available. So, when such a thing happens, there are 3 schemes which are given to the residents which generally pay for the entire cost of construction. Scheme number 1, whatever is the free area that all the members get, Over and above that, if a member wants to buy certain area, then he shall be entitled to buy that area at a discounted price of 15%, which means if the selling price for any other outsider is 20,000 rupees per square feet, 30% discount on that makes the member get it 20,000 minus 6,000 at 14,000 rupees per square feet. So if a member other than what he is entitled buys extra area, he will get it at 30% of the discounted price. That is scheme number 1. Scheme number 2 to raise resources is if the member's blood relation. What do we mean by blood relation? The member's son, daughter, even if the daughter is married, grandsons and granddaughters, member's father or mother, and member's grandfather or grandmother. Any one of these people want to buy a separate flat, not the flat in which the member is living, a separate flat in the same building from the free sale area, then the blood relation of the member who buys the separate flat will be entitled to a 20% discount. Now, if the member is staying in the flat and his son or daughter who were staying with him are presently staying somewhere else, they want to come back to the original place of residence but stay in a separate flat, they can buy a separate flat. That flat could even be neighboring to the member's flat so that at some stage it can be together. It can also be separate and on separate floors if the member and the blood relation so decide. So that's the second scheme. The third scheme is other relations. What do we mean by other relation? The member's brother, sister and their children and grandchildren. The member's spouses, father, mother, brother, sister and their children and grandchildren. These are the other relations. The other relations other than blood relations, if they want to buy a flat from the free sale area, then they will be entitled to a discount of 15% of the market price. For instance, if the market price of selling is 20,000 rupees per square feet, then the other relations of the member can get the flat at 15% discount, means 3,000 discount, and get it at 17,000 rupees per square feet. In these three schemes, our experience has been that more than 45% of the space to be sold is available for sale to these three sections. A, the member in the form of extra area. B, the blood relations of member in the form of extra flat, separate flat. C, the other relations of the member in the form of a separate flat. Now, over and above that, if 50% of the area is sold in this manner, then the remaining area has to be sold. So, every member will get a preferential allotment and a right to dispose of one flat to any outsider at a price that is decided by the cooperative housing society. The cooperative housing society, instead of allowing any agent to sell on their behalf, makes all their members and their children the agencies for the societies, and the members through internet and through personal campaigning circulate the plans of the building to all their friends who want to buy. And if a member gets a customer who would buy a flat, then from the customer who buys the flat, the member is entitled 2% of the price of the flat as brokerage, which the buyer would have otherwise given it to some broker. That payment, instead of giving it to that broker, is given by the buyer to the cooperative housing society member. So there is incentive for any cooperative housing society member to sell the flats, and these are the flats. If you sell a flat for 1 crore of rupees, you get 2 lakhs of rupees. If you sell the flat for 2 crore of rupees, you get 4 lakhs of rupees. So the member gets some additional income. The children of members or family members of the members who are not employed get some source of gainful employment by campaigning for the society and getting customers who would buy the flat. In this way, the flats would be sold. However, if a member does not have a capacity to sell any flat, he can surrender his right to sell the flat to the society, and the society may allot it to any other member who says, okay, I will bring you the customer. So that member, instead of 1 flat, can be given 2 or 3 as the case may be. In some cases, the society have resolved that if a member sells 3 or more flats and gets substantial revenue to the society, then the member is entitled to 2% of the sellable value of those flats from the buyers, and over and above that, the society will give 1% of the value of all the 3 flats to the member as an incentive for helping the society sell its extra area. We have noticed that under all these schemes, more than 60 to 65% of the flats get sold. And if they get sold, if there is a commitment to sell them, you cannot sell them till your plans are approved and you get RERA approval. But at least you get a commitment from them. Then the members who are buying the flats, be they blood relations, be they other relation, be the member who's buying extra area, the money comes from the housing loan which is given to them. So a member who buys extra area can avail of housing loan, a member's blood relation can avail of housing loan, a member's other relation can avail of housing loan, and the other buyers whom the member is bringing as a buyer can avail of housing loan. And as we all know, these loans today come at a considerable rate of interest which is very reasonable. The present rate of interest ranges between 7.5% and quarter to 8%, and that is going to go further down. It would be 7 and it could also be 6.75. So at that rate, if the society gets the loan from the buyers, there could be an arrangement with the bank that from that loan, the entire building can be done. Only issue would be for bridge loan, and instead of getting a bridge loan, the members who buy the extra area can give portion of the money that they would pay to the society, certain percentage of that in advance. Then that money can go towards the bridge amount. And so under this scheme, with these 4 or 5 schemes, without the help of any bank or any financial institution, we have several societies which have embarked on self-redevelopment, not even approached any bank or NBFC, and still their scheme is going successfully. So for the success of a self-redevelopment scheme, you do not require any bank to give you a loan. Without the members who cannot afford spending any money from their pocket upfront, no member who doesn't want to pay pays any money upfront. Only such members who want to buy extra area will put in upfront money, and the rest of the members will not pay any upfront money, and still the scheme can be made successful without the help of any bank or financial institution. If any one of you have any queries on this scheme of funding the whole self-redevelopment scheme without taking the help of a bank or any financial institution, please get in touch with me. I shall be happy to address your general body meetings and convince all the members as to how it can be done. With this is Chandrashekhar Prabhu bidding you au revoir and promising you that I shall be back with more posts. Many of you are viewing, the viewership has increased. Please subscribe, please watch, please enjoy, please comment, and we shall be happy to reply to your comment. Bye for now.